a part of the Equifax family. They were actually acquired, I believe, back in 2019.
Yep.
That's important to know.
Yep.
Because that means that they have a much larger footprint and they have a much larger reach. Because now think of it like this. You have US Bank, and then you have the subsidiary, which is going to be Elon Financial of US Bank. Remember, we've covered that before. As a matter of fact, we're going to bring that back up during the funding call next week, which a lot of people, they don't know that. But now you do, because you're on this call. Paynet is kind of like under the umbrella of Equifax. This is important because you have the Equifax score, and then actually I should say scores, right? They have various scores. They have the risk scores, they have the risk mitigation scores, they have the default scores, but I'll just say scores. And then you have the Paynet master score, which is going to predict the risk based on 587 variables, Rad, and 135 unique variables. That's how they're grading each of our businesses based on how Paynet has it structured, right? And all of that information is feeding back in through Small Business Financial Exchange. Now we're starting to see how it's all kind of coming together, right? You have Paynet, flows up to Equifax, Equifax flows back into Small Business Financial Exchange, which then flows back to you. And you're wondering, why am I getting denied? Because there's more to it. Now, the Paynet master score goes from 450 to 800, where the lower the score, the higher the risk, similar to how it is, right? In most cases, especially like in the business credit realm or personal credit realm. Now, they have scorecards, and their scorecards, they're going to take a look at your industry, the industry size. They're going to take a look at, your industry, the size of your business, the age and or the combination. Here's why I want to drop my cap on here, and I want to kind of let this part sit right here. A lot of us have been lying on our applications. A lot of us have been lying on our applications. A lot of funding companies, and I'll say it as well because I know this industry extremely well. A lot of funding companies, they're not telling you what they're putting on these applications.
Oh my God.
And because they're not telling you what they're putting on your applications, you don't necessarily know what data is being harvested for you or against you. So when they say, hey, you're in trucking, but I think that you should put consulting instead of trucking, you guys know how I feel about that. Be truthful about it. I'd rather see you put logistics. I'd rather see you put general management versus consult. Dude, you're not consulting. My dad's a trucker. My dad was a trucker for many years, me growing up over 30 years. You're not consulting. You're out there, you're driving. You are the lifeline of this country. You're not consulting. You're out there getting after it. So when they put consulting, your business is now being sized up against other consulting companies, and they're also being sized up against the average age of that same industry and the borrower size, which means if, let's say, you are in the trucking industry and the average trucker, just off the head example, right? Not saying that you make this, $250 in the first 3 years. Could be a lot more, could be a lot less. $250,000 gross revenue in the first, let's say, 3 years. And now you're putting that you're in the consulting business, which now carries different margins, which is why they put it, and they tell you to put it, right? Because it's considered low risk, carries different margins, carries a different type of size, carries a different type of location, a different type of demographic, and more often than not, that now translates into, wait a minute, this profile doesn't match what Small Business Financial Exchange has, what Paynet has, what Sonia has, which we're going to be breaking down, what Experian, what Equifax has. And I know that you're probably wondering, okay, where are you going with this? I'm going with this where how you do anything is how you do everything. So if you are...
Say that again. Say that. That is a gem. Say that again, and everybody listen to what he just said.
How you do anything is how you do everything, right?
So
So if you are, let's say, paying a funding company, I want you know what the heck they're putting on your application. Dude, how many employees are you putting on there? What's my entity? What's my NAICS code? What's the SIC code? What address are you guys using? What's the gross revenue being reported on there? What's the personal income being reported on there? What's the total household income? What's the projected revenue being reported on there? I need to know this because when I stop working with you, I am going to try to apply for a business loan, a home loan later on. And guess who that's going to bite back in their rear end? It's not going to be them, ladies and gents. It's going to be you. It's going to be you, which is why, and even if you're doing this yourself on applications, I get it. The more you put on an application, naturally, you're going to get more. Look, me and Rad understand these numbers more than just about anyone else. Rarely do you see us making videos about put this on your application. I'll give you case studies of what clients made, but I won't say put the specific number because everyone is different. And so I'll get off that real quick because I know that.
No. Don't get off that real quick. How many people want to hear what happens when you lie on an application? Put me in the chat. Put me in the chat. How many people want to know what happens when you lie on an application? Now, this is not going to be a come to Jesus meeting and everybody confess that they've lied on applications. Okay, that's between you and the Almighty.
Yeah, no,
but
we're not calling anyone out. We're
not calling anybody out. But talk to them about what happens when you apply and lie. Right? What does it happen with the bureaus? What happens in the funding companies? Break that down. So when a funding company happens, they shotgun your credit. They need to put in there to get the deal. They know the numbers to get the job done. They know what the relationship bankers need. So tell them the process of when you work with a funding company, because this is a very good piece of information for people that if they work with funding companies, they need to know this information. So when they work with a funding company, what happens and how does a person in funding help somebody secure funding when it comes to the client, to the relationship manager, and to get these massive approvals? How do the numbers need to look for them? And then what can happen if these numbers don't reflect what they put on there? What's some ramifications that the client needs to provide as far as paperwork?
Mm-hmm.
What happens 100%. On the back end with the Paynet, with all the bureaus? And here's another thing, guys, a lot of funding companies will actually go to Fiverr to make pay stubs. And that is a big no-no. And some of you guys are on this call that make pay stubs. And that's a big no-no. How do I know? Because I've deleted a lot of your comments in my Facebook group. Okay. We need to have a real conversation about credit fraud. Okay. Because a lot of the people that you're listening to will fraud the system for $1. And if they'll fraud the system for $1, what do you think they'll do for you? Talk to them, Irv. Let's have a serious conversation real quick about this.
100%. So I want everyone on this call to be very mindful and careful of what I'm about to say right here. Right. The reason why me and Rad bring this type of material to you is so that you not just know how to fish, but if you decide to hire someone, right? If you just say, dude, I don't have time for this, let me hire. I want you to at least know what's being done on the back end, right? If you don't know what you don't know, it's going to hurt you more if you know something and decide not to do anything about it. Both of them are going to hurt you in their own ways. So now that you know this information, you want to find out, or you want to know keep a track record. This is what I'm reporting. If you're doing your own funding sequence, I tell my clients, take a screenshot of everything that you're reporting. How many employees did I put on here? What's the revenue that I'm reporting? Yes, there's applications that are going to ask you for projected revenue. Do I want you to be optimistic? 100%. Do I also want you to be careful not to over leverage yourself and say, hey, I'm going to make $1 million in my first year? 100%. You want to know the total household income that you're putting on there. You want to put the time or the age that you've been in business. I know that a lot of times you may want to sidestep that and say, well, I've technically been in business with, let's say, a sole prop for the last 5 years. But unfortunately, the bank, what they're going to take a look at is not just the age of when you opened up that account, but they're also going to take a look at the age of the entity that you opened up. Now, it's a full different discussion if we're talking about you buying an H Corp. That is a sidestep that you can have. But I'm talking about you putting a number that you know is a bit higher so that you can secure that funding, or so that you can secure that. Two things happen. Number one is obviously Fed time, right? We're all seeing the memes about what people did with the PPP loans, right? Some of that stuff is funny when you're watching the memes, but it's also not funny because some of these people are throwing their lives away just to get a couple of extra bucks. And I know that desperate times calls for desperate measures, but I don't want you to be one of them, right? I want everyone in this room to win. I know that only a select few of us, though, are actually going to use this information and apply it. I know that a good amount of us are going to go back to our ordinary lives. We're going to say, that was a great call. Let me call that funding company because this is a lot of work. So again, we're adults. We're going to treat this how we want. But the second thing is you'll get blacklisted. The last thing that you want to do is get blacklisted, because I know what it's like to be in American Express jail. Rad knows what it's like to be in American Express jail. I know what it's like to be in Bank of America jail. I don't know if he does. And I know how hard you have to work in order for you to get out of what we call that jail. And that jail, I'm not talking about fraud. I'm talking about, I just had collections with them, for crying out loud. God forbid you commit a fraud like that and they catch it. You get blacklisted. Look, I don't care how many EINs you got. I don't care how many CPNs you try to burn through. That's not going to work, especially with how sharp algorithms are getting. everything's going to go, everything's essentially getting attached back to your social. It just is what it is. And so, yes, you still have your EIN, but your social, which is what you still have to put on these applications, especially with some of these bigger banks, you're gonna say, wait a minute, wasn't that the person that looked through the list? Boom, yep, that's them, auto denial. And maybe it's because of nothing that you did. Maybe it's something that was done beforehand and you knew nothing about. But guess what? Now you do. And so I'm going to move on from this one because I still got some more ground to cover. Credit.net. That's an Experian partner. We had Paynet, Equifax family, Experian partner with Credit.net. Notice the language that I'm using. A family means that they're acquired. They're inside of their umbrella. Partner means I'm doing a transaction with them. They're still two different businesses, right? So Credit.net is a business credit reporting agency that operates both in the US and in Canada. So for my Canadians that are watching the call, what's up, right? But for the rest of us that are here in the US, this is going to be a multinational reporting agency, which is really interesting to see, especially in this type of space. And so they host over 16 million businesses inside of their database. They've partnered directly with Experian, which means they cross-reference business data points with each other. Credit.net reports include the recommended limit for your business. So similar to what we had with Safe, that's the same thing here, where they're giving a recommendation to the creditor, they're giving a recommendation to the bank. Hey, based off of these risk factors that we've pulled up, this is how much funding or this is how much of a trade line this company should get. Now, they're typically going to pull it from, essentially their reports are made up of for your financials, so on your business and on your personal side, the reputation. This is why I wanted to drill down what I just finished mentioning earlier. Reputation of the business and reputation of the owner and public record information. Again, their score ranges from 1 to 100. So the higher, the better. With this, you want to have at least a 70. Remember what we said earlier, C's get degrees. And so a C is a passing score when it comes to Credit.net. Now, if they don't have enough data on you, then it's just not going to calculate a business credit score. Same thing with them, Credit.net. You can check them out right on creditliterary.net. You can look that up. It'll take you right to their website. And then from there, you can see how you can order yourself a business credit report, which I won't spend too much time on because I wanted to really spend some time on this one right here.